Considering we're less than an hour away now to the budget speech, let me welcome on board our 5 wise men and bring on board our ET Now budget think tank. So please join me in welcoming Shashank Srivastava, Senior Executive Officer, Marketing and Sales, Maruti Suzuki. He'll join us just shortly. Ashok Tyagi, Whole-Time Director and CEO at DLF. We have with us Hitesh Doshi, the Chairman and MD at the WAAREE Group, and Rohinton Sidhwa, Partner at Deloitte India. Gentlemen, great to have you all on board with us today. Mr. Tyagi, let me start off with you. I believe it's completely rained out in New Delhi. Some of our experts who've traveled to join us on budget were telling us. You think the finance minister today with her announcement could perhaps warm the climate a little bit, or do you think it's going to be more of the same and more so a vision statement today that we're going to hear from her?
So, Aisha, good morning. Obviously, winter rains are auspicious. So I think it's a harbinger of good times. The fact that it rained yesterday and today morning. You know, honestly, I don't claim to be an expert, but whatever one's seen of interim budgets in the past, interim budgets that one has seen, interim budgets typically are not major policy disruptors, if you will. They are a statement of continuity, as the gentleman from CII was also mentioning earlier. I do believe that from an overall, our sector at least standpoint, there should be some benefits at the lower end of the segment for affordable housing and low-income housing. One of our perpetual demands has been to enhance the interest exemption for housing loans. But anyway, I think the most important thing, frankly, if you ask me from a macroeconomic standpoint, that will impact a lot of sectors, including ours, would be that if the FM continues to be, on the responsible fiscal deficit glide path that she has laid out, because that will mean inflation stays under control and growth is sort of, on a strong footing, which frankly has downstream benefits for all of us.
All right, Mr. Doshi, good morning. Thanks so much for taking time out and being with us. And, given the fact that traditionally and conventionally an interim budget is supposed to be more a statement of accounts, we did see that in the year 2019, though, there were significant policy announcements. What is it that you're going in with in terms of expectations today?
Thank you. Thank you, Liz, for inviting, and good morning to all. I think it's the interim budget, so it will be not good to put the expectations today. But looking to the green energy, particularly from where we are working as a company, we are expecting definitely to do at least at the level of China in terms of the GDP, where the 5% GDP growth, as which they have declared, the 2% came from the green energy business out of that 5. And when we talk about the jobs, the global 40% are coming from China only in the green energy, and installations, it is more than 50%. So the wish is the budget comes in the direction where the India tries to match these numbers.
Okay, let's also take it on with Rohinton. Rohinton, he's in the studio right now, Sidhwa from Deloitte India. And Rohinton, great to have you in the show. I'm sure many people confuse you with Rohinton Mystery, right?
Well, I'm flattered by that.
Yeah, because that's who always comes to my mind. But tell me anything on taxation, because, budgets for the Aam Aadmi is all about whether taxes are going to come down or not.
No, so there are those things which weigh upon them, but fortunately this year, they are in for a set of blockbuster collections. It's very much expected that the revised estimate will also be exceeded when the collections come home. We have March, which we are looking forward to, which is the final installment of advance taxes and self-assessment taxes. And that's when the final collection really comes in for direct taxes.
In the meantime, I'd like to welcome on board Mr. Shashank Srivastava as well, who's joining in from Maruti. It's not just the budget. We can also talk about your overall auto sales numbers. But why don't I start off by just getting a context then from you as to what exactly the expectation is going to be, the path of fiscal consolidation, perhaps some welfare schemes. All of that is going to be very closely tracked. What's on top of mind?
Auto industry, of course, this year has been significant because we have crossed the 4 million mark for the first time ever, becoming the third largest in the world. as far as passenger vehicles is concerned. Now, there is one strong correlation between the auto industry performance and the overall economic growth. And that's why anything which supports growth is positive for the auto industry. And therefore, I would feel that since it's an interim budget, I would see a lot of continuity in the policies already laid out, especially for manufacturing support, like the PLI or the FAME, as also the support for the rural areas, particularly in the infrastructure spending sector. I would expect that the capex expenditure continue. There is obviously a balancing fiscal deficit to be taken into account. I think, given the past for this government, I think they have done a fantastic job in continuing with the expenditure on the capital assets, and therefore I believe this would continue in this budget as well. As far as the auto industry specifically is concerned, we would obviously like the green energy support a little more, in the sense that we are now moving towards a much more tougher emission norms. Sustainability is the key for the industry, and therefore I would expect that all forms of green energy, whether it is CNG or biogas or hybrids, as well as EVs, will continue to receive support in this budget as well, and also in the main budget, which will come subsequently. Therefore, I think we are on a very strong footing thanks to the government policies, and I hope that these policies continue and there is continuity in the future as well.
Okay, just stay on with us. Lots more to talk about with all of our experts. But Rohinton's audio is back. Rohinton, you were telling us whether there's going to be any, revision in the tax or not.
So this is a great time to do it, because they have money which is surplus from what their budget estimates are. This is also a great time for giveaways on some of the tax benefits. One benefit in particular that industry has been looking out for is the extension of the 15% tax holiday on manufacturing. It actually runs out on March 2024. And I mean, basically the reason why industry is asking for that extension is that, it was meant for diverting some global supply chains to India. And it's been on from 2019. So it's about 4 years. Now, many of these capital intensive projects take a long time, a long gestation time to kind of set up. So the ask is to extend that tax holiday as more projects need to come to India. We have some big projects coming in, both on the EV side, semiconductor, all those can perhaps benefit from this tax holiday.
Okay, fair enough. Wanted to get in a take from you then, Mr. Doshi, in terms of what the outlook is when it comes to the roadmap in terms of funding for the infrastructure sector. Given that a lot of these themes also have done fairly well in terms of the stock market perspective, do you think that the markets will take some sort of comfort and that this is also going to be an area that the finance minister will focus on? Mr. Doshi, that question was for you, if you can hear me.
Yeah, I can.
Yeah, go ahead, sir. Talking about the infrastructure sector.
Yeah, I think that will be one of the focus, and that is a need of our also, which government has been focusing. So we are quite confident that there will be a good investment coming in along with the good policies here.
Yeah, actually, that should be a question to you. Yours is the sector which has been booming almost on a monthly basis. We get, reports that MMR, NCR, they're all clocking record high sales over and over again. Tell me, what's the expectation from your sector? And given the multiplier effect that real estate has at large, what can the budget do to try and ensure that that chugs along for not just, this year, but next many years to come, considering your sector is coming out of a decadal bear market, if you will?
So you're right, Aisha. I mean, it has come out of a decadal bear market. There's no doubt about that. I think the 3 or 4 things that the sector should be looking for from this budget and the June budget really would be obviously, how can our customers have more disposable income at their hands, be it in terms of more enhanced tax slabs, or especially at the medium, middle, and the higher levels, the interest exemption limits, as I mentioned. So those couple of things clearly. How the interest rate scenario pans out, because I think it's already moved to about, the mortgage rates are now in the range of 8.5 to 8.75. And clearly, if the fiscal glide path continues to be responsible as it's been under this government, then hopefully those should start moderating at some stage. And the third thing, which was alluded to earlier, which I think has had a huge benefit to the sector, especially in NCR, I can definitely vouch, is the investment in infrastructure. I mean, our last launch, which we reported, a few weeks back, honestly, that area has just sort of reinvented itself because of the huge infrastructure investment that have been made by the central and the state governments. So I think the government's continued commitment to infrastructure would again be a very strong driver to hopefully what should be a reasonably long upcycle for this entire sector.
Right. Mr. Srivastava, I wanted to get in your perspective as well, given that it has been a bit of a slow growth this time around when we've seen the overall rural economy. Given that it is an election year this time around, do you think higher allocations for some of the rural schemes is something that's anticipated?
Yeah, I think so. Because, but by the way, before we say what is going to happen in the future, the past, as far as car industry is concerned, and we have been tracking this rural growth versus urban growth for the last 17, 18 years. All these years, the rural growth has been faster than the urban growth, except for 1 year, which was 2013. Even in this year so far, for the auto sector, rural growth is around 11.9% against urban of about 8.5%. So it appears that the rural incomes are rising faster, although we could see variations, and there is a little bit of fragility there more than the urban areas. I think going forward, and Maruti Suzuki actually is leading as far as rural sales is concerned. 44-45% of our sales are in rural areas. We do see a very positive sentiment, even though, for the next year, it is possible because the Kharif output is a little less than the previous year, is about 4.5% less. But we do see stress in some of the states, like for example, where sugarcane or oil seeds or cotton is a large part of the acreage. We see probably stress. Cotton is about 7% down over last year. Oil seeds about 11-13%, and sugarcane down about 11% or 12%. So I think some of the states, particularly Maharashtra, Saurashtra, Gujarat, and UP in some parts, the rural areas, would require some support, I believe, because while the Rabi sowing has been also not so great this time, with a Kharif output shortfall, I would expect the support to continue in the rural areas, even more than what we have seen in the recent past.
Absolutely, considering that's the end of the economy also, which has been a little marred, and we've seen the numbers coming in from every quarters, be it autos, FMCG. So, and it being an election year in any case. So, some sort of upliftment of the rural end of the economy, something that the interim budget today can entail, can definitely lift up the sentiment and add to those consumption numbers for sure. But gentlemen, great to have you all on board with us and be part of ET Now's think tank. We'll see you after the budget speech. Good speaking with you.